Hi friends, welcome back to Stockwood channel. So in this video, we'll be discussing about the three chemical stocks, and mainly we'll be discussing about the future of the stock based on its product and also the other informations about the stock. And at the end of this video, I'll be sharing the name of another chemical stock which is also promising. And also previously I had made a detailed analysis about the chemical sector in India. If you have not watched it, I would highly recommend you to watch this video at your convenience. Also, if you're not still subscribed to this channel, I would highly recommend you to subscribe to my channel for regular updates. And previously, I had made many videos related to Lux Industries, Dixon Technologies, and other sectors like defense sectors, and also some of the stocks which is currently trading at a good valuation. So, without much delay, let's get started with this video. So the first stock which I'll be talking today is Tata Chemicals. So Tata Chemicals was incorporated in 1939, which has almost a history of almost around 80 to 85 years. And the major business verticals of this company is basic chemicals and the specialty chemicals. So one of the major products in the basic chemicals of Tata Chemicals is soda ash and sodium bicarbonate. So since this is the major product of Tata Chemicals, which actually contributes almost about 50% of the total revenue of this company, let us look into more details about soda ash and sodium bicarbonate later in this video. The other main business unit of Tata Chemicals is the specialty chemicals, which caters to the agrochemical industry. So it supplies majority of its products in the specialty chemicals to another Tata group, that is Rallis India, which is mainly into the crop protection business. If you see the geographical revenue split of Tata Chemicals, majority of its revenue comes from India and America, also a small share in Africa and Europe region. While the product revenue split, it is almost 52% of its revenue comes soda ash. So let us understand more about soda ash and its uses. So soda ash is basically used in manufacture of lithium carbonate, which is the main ingredients in manufacturing of lithium ion batteries. And also not only the batteries, it is also used in manufacture of glasses, and glass are used in the manufacturing of the solar panels. So both these industries are expected to grow exponentially in the coming days in India as well globally. Some of the other advantages that Tata Chemicals has against its competitors are the Tata Chemicals, which is a part of the Tata Group, has got into an understanding with other Tata companies like Tata Power and Tata Motors to form a consortium for technology transfer and easy logistics. Since Tata Motors and Tata Power are into the electrical vehicle business, Tata Chemicals can directly supply its products to Tata Motors and Tata Power. And as these two companies, Tata Power and Tata Motors, grow, it will also have an advantage to Tata Chemicals. And also, given that soda ash is used in manufacture of solar panels and electric vehicles, it is expected that the demand for soda ash to reach almost around 60 lakhs by 2030 from the current levels of around 40 lakh tons. With this understanding, let us look into more details about Tata Chemicals. So Tata Chemicals is a mid-cap company which has a market cap of almost around 26,000 crores with a debt to equity of around 0.3. The industry PE of the chemical sector in India is around 26.3, but the stock PE of Tata Chemicals is much lower than the industry PE of, which is currently at around 12.6. If you see the price chart of the Tata Chemicals for the last 3 years, the Tata Chemicals stock has rallied exponentially from the levels of around 300 in 2020 to the levels of around 1100 in mid 2022. From there, it has corrected around 10 to 15%, and it is showing a strong recovery currently. And also, if you see the PE ratio, which is a good indication of the valuation of this company has also fallen drastically from the levels of around 82 to the current levels of around 12. If you see the quarterly results of this company for over a last 10 quarters, the revenue has increased almost by 80% from the levels of 2,600 crores to 4,000 crores. And also the net profit has increased exponentially from around levels of 200 crores to 425 crores. But if you see from the previous quarter, that is September 22 to December 22, there is a small dip in the revenues as well as the profitability of this company. And that may be the reason why the stock has corrected by 10 to 12% in the short term. Another important parameter of the stock is the promoter holding is increasing from the last 10 quarters, which was around 34.5% to the current levels of almost 38%. The FIS also has increasing the stake in this company from the levels of 9.3 to 14.43, but the DIS have disinvested in this company drastically. Also, public has a huge stake in this company, almost around 28.6%, which can actually lead to volatility in the market based on the news. Now let's move to the stock number two. So stock number two, which I'll be talking now, is about Fine Organics. So Fine Organics is one of the largest in India and the sixth largest globally in manufacture of oleo-based chemicals. So let us understand what these oleo-based chemicals are. So oleo-based chemicals is an alternative to synthetic chemicals, which is actually previously had applications in toothpaste, shampoos, pharmaceuticals, polymers, and other various applications. So since the synthetic based chemicals were not good for the human health, most of the companies are looking for alternatives to synthetic chemicals, that is in the form of oleochemicals. So oleochemicals is derived from palm oil, as you can see in this picture. Since oleo-based chemicals is manufactured from palm oil, the prices of palm oil will have a major implications in the profitability of Fine Organics. If you can see this chart, this is a chart of the price of palm oil globally in USD. So in sometime in March of 2022, the prices of palm oil was almost around 1,500 USD per ton, which had actually increased exponentially from the levels of around 400 USD per ton. Now currently the palm oil prices have cooled off to the levels of around 900 USD per ton, and this will have a good implication in the margins of Fine Organics. So with that understanding, let's get into the other details of Fine Organics. So Fine Organics is a mid-cap company with a market cap of around 13,000 crores, and ROCE is good at around 38.8% and ROE of around 30.7. The stock PE is around 23.3, relatively less to the industry PE. The stock price of Fine Organics had increased exponentially from the levels of around 1,900 to the levels of 7,000 over a period of 1 year. But this has corrected drastically by almost around 40 to 50% and currently trading at around 4,300 rupees. And also one of the other parameters that the investors has to look is the PE, which give a good indication of the valuation. So the PE of this company has also drastically corrected from the levels of around 80 to the levels of 20. The revenues of Fine Organics has increased from the levels of 266 crores in December 2019 to the levels of 760 crores in December 2022. And also the net profits of this company has increased almost by 3x from the levels of 36 crores to 106 crores. But in the recent quarter, compared to the previous quarter in September 22, the revenues and the net profit has drastically reduced. And that is the reason why there is a huge fall in the price of the stock. If you see the shareholding pattern of Fine Organics, the promoters has a good holding of almost 75%. FIS have also invested stably in this company, which has a stake of around 5.3% to 5.9%. The DIS have also slightly reduced their stake in this company to the levels of 11%. If the information shared in the video is useful, humble request to hit the like button and subscribe to the channel. It motivates me to come with more such videos and help the YouTube algorithm. So the third stock I'll be talking today is about Deepak Nitrates. So Deepak Nitrates was started in the year 1972 and it has almost experience of around 5 decades in this chemical industry. It has almost around 35 patents in chemical industry and also 70% market share in some of its major products. Some of the other important points about Deepak Nitrates it has almost around 100 plus products, and also it serves to some of the Fortune 500 companies, and also has around 700 plus customers in the chemical industry. To understand more about Deepak Nitrates, let's hit into the screener. Right, Deepak Nitrates has a 75% market share in sodium nitrate and sodium nitrite, so which is basically used in the food industry as preservatives. And also it has around 50% market share in phenol and acetone. Even though it has 50% market share in phenol and acetone, it has a revenue share of almost 62% of all its products from phenolic. The rest 18% comes from basic intermediates and 12% from fine and specialty chemicals, and the rest 8% comes from the performance products. If you see the geographical split of revenue, majority of its revenue come from its sales in the domestic market, while 22% comes from exports to countries like USA and some of the countries in the Middle East. So Deepak Nitrates is also a mid-cap company with almost having a market cap of almost 25,000 crores. The debt to equity of this company is very minimal or zero of 0.07, and the stock PE is slightly higher than the industry PE of around 28.5. If you see the price chart of Deepak Nitrates for the period of 3 years, its share price has increased exponentially from the levels of around 500 to the levels of 2500. That is almost around a 5x returns in a period of 1 year. But after that, it has corrected by around 10 to 15% and currently trading at the levels of around 1800. The PE ratio of this company is also corrected from the levels of around 40 to current levels of 30. If you see the quarterly results of Deepak Nitrates, its revenues has not increased to the levels how the share price has increased by 5x. Right? If you see the revenues of this company in December 2019, it was around 1,100 crores, and currently it is not even 2x of its revenue from the period of 2019 to the current levels of slightly less than 2,000 crores. And also the net profit has also not increased even by 2x from the levels of the 150 crores in December 2019 to the current levels of 200 crores in December 2022. So I have a feeling that the share price is still at a higher side given the revenues and profits have not increased by 5x in the period of last 1 or 2 years. If you see the shareholding pattern of this company, the promoters' share in this company is almost stable at around 45%. The FIFs have decreased their stake in this company from levels of around 11% to 8% currently, and also the DIS have reduced their stake by 3% from the levels of 16% to 13%. Also, this company's share price will be volatile given the public has a good holding in this company of almost around 30%. The fourth stock which I'll be mentioning in this video is SRF Limited. This is not a pure play chemical company because only around 43% of its overall revenue come from chemical business, but the rest of its revenues come from other business segments like packaging films, technical textile business, and other businesses. So this is not a pure play chemical company, and this company share price can be very volatile that given its product is diversified across various segments. So this was a short video about chemical stocks in India. If you like this video, please subscribe to my channel and hit the like button. It means a lot to me. Thank you.